of blockchain technology, where it came from, really trying to create this new world where you're directly connecting the content creators to the communities. So there is nobody in the middle that's able to take that cut that, companies today do, but that profit that they take actually goes back to the people, or it goes back to the content creators.
Hello, everyone, and welcome to Profit to the People, the official podcast of Republic, where we believe you have the power to invest in the future you believe in. I'm your host, Lisa Carmen Wang, head of brand at Republic, and I'll be taking you behind the scenes to meet the team, founders, and investors in our community who share their insights on the future of investing and how they're bringing profit back to the people. To learn how you can invest, head over to republic.co and follow us on all social channels at Join Republic. So you guys asked and we listened. We wanted to hear all about crypto and crypto investing. So I have none other than the crypto and blockchain experts, Brian Mint and Graham Friedman. They are the directors at Republic Crypto, and they are here today to share their knowledge, to share what they do at Republic Crypto, their hot takes on what's going on in the industry, and of course, how they are bringing profit to the people. Brian and Graham, welcome to the show.
Thanks, Lisa. Super good to be here. Excited to talk to the people. Want to give the people what they want. We love crypto. Grateful to be in this space every day. So excited to dive right in.
Absolutely. And I'm just going to add, I know we've had a lot of excitement. Brian and I tend to give internal presentations at Republic. So this will be our first to the community. Really thrilled to be here.
Awesome. So just to kick us off, what is Republic Crypto? Why does it exist?
So Republic Crypto really started off very much around the same time that Republic started in 2016. Republic Crypto started near the end of 2017. And it really was just an extension of democratizing access to fundraising, right? If you really think about what ICOs did in 2017, they're a form of crowdfunding where people from around the world can support projects by contributing cryptocurrency to these projects. The main problem was that a lot of these sales were conducted in a legally questionable manner. So enter Republic, where, back in 2017, I met Ken, and he was building out this platform that you all know and love to help democratize access to private investing. And it was just a natural fit to kind of extend that framework to investing in cryptocurrency and blockchain projects. So that's kind of how the genesis of Republic Crypto came to be. It has since morphed into a little bit more than that, which I'm sure we're going to dive into later. And Graham can probably kind of fill out a little bit more of like what it's evolved into down the line as well.
Yeah, just to, add on briefly, I think one of the most interesting things is obviously Republic's mission, profit to the people. Crypto's underlying thesis is that users are owners and vice versa. So, that's really exactly the same concept as crowdfunding. From our position, we're in a pretty privileged place to see a lot of what's going on in the crypto industry, but also within the traditional fintech industry. And, I've been saying that crypto and fintech are the same thing. Maybe fintech just doesn't admit that yet. In a nutshell, we are seeing a convergence to this new financial investment model ecosystem, whatever you want to call it.
And we can't wait to hear those hot takes. But just to even go back a little bit further, because I think it's really important for people to understand what your backgrounds are as well, and where this expertise came from, even before you came into Republic.
Yeah, so my background really, I guess it depends on how far back you want to go, but essentially I started off with an engineering background. So my background really is technical. It's more in the electrical and bioengineering space, which to me makes my interest in crypto from a technical perspective that much more interesting. So aside from just building the relationships and helping projects grow, I also like to understand how they're using blockchain technology and actually how the core infrastructure of blockchain technology is enabling these projects to be disruptive in the industries that they are. So that technical background from where I started my career really is helping me to be a little bit more knowledgeable in the crypto space today. But since then, I've moved into working at different startups. I worked at an early stage startup called Breeze, which got acquired by Ford. And then after that, I went into strategy consulting, where I did consulting for larger Fortune 100 companies, where I helped learn how to scale companies and work with really big companies and how they operate. And then I was like, all right, now I'm done with big companies. Let's go back to startup land. And it was around that time that I discovered crypto and, as many people do, fell down the rabbit hole and met Ken, met other people in the space. And I was just attracted by the quality of people, not only by how smart they were, but also just how genuine and passionate they were in the space. And I just knew I needed to be in that industry. So I took what I learned from my engineering background, startup background, and kind of consulting background to help grow Republic into what it is today. I know that Graham has a very unique background. I just want to say that we are extremely lucky to have someone like him on the team, because he brings a wealth of knowledge that is in a very non-traditional crypto background, which I'm sure everyone's excited to hear.
Why, thank you, sir.
Yes.
So one of the most, I think, thrilling things about the space is that at least presently, no independent area or field of expertise, there's not really somebody that has the full set, right? This industry incorporates a lot of finance, economics, game theory, computer science, community development. So it is very interesting. There's a lot of people here that come from all over the place. So as Brian mentioned, I'm traditionally a filmmaker, cinematographer as my background. Have been working in commercials for a very long time. I was the senior photographer at Gary Vaynerchuk's VaynerMedia, where we produced a lot of really cutting edge mobile content. That's what, trying to interact directly with people's communities, brand communities, finding new ways to incorporate things through Musical.ly, which was TikTok before it was TikTok, working very closely with Vine, vertical video, all sorts of interactive formats, 360-degree video, virtual reality, just trying to figure out ways to bring a brand message really into a home and create a resonant sensation with their community as well. All of that came back very closely into crypto. But honestly, I've just been a technologist and a futurist my whole life, very curious about messaging across the masses. How do people really communicate? And crypto just took a lot of that. Obviously, I've been interested in investing as well. And it brought all that together, right? One of the core tenets that comes through and through, no matter what kind of project you're building, what space within crypto you're actually building in, is going to be that community development. It's about, again, the owners and the users are one and the same, right? There isn't a middleman in this ecosystem. So one of the most fun things to see are just teams that are able to build these amazing communities that can push their asset forward and realistically their product, right? The asset really reflects the caliber of the product and the passion of the community. Filmmaking, I took a lot of that. I also think one of the big tenets of filmmaking is bringing your imagination to life, right? Creating a reality out of this insane ideations. And crypto is extremely sci-fi, really futuristic. So that was a clear pathway forward. Since then, I actually entered through a venture capital firm that I co-founded with some friends, have been advising companies since late 2016, and have actually taken a lot of that experience directly into Republic, where I'm very happy to work with the team that we have now.
It's great to hear both of your backgrounds and how different they are. And as someone who has a great appreciation for both the left and the right side of the brain, seeing how crypto is inclusive and accepting of people from all different backgrounds. And I think, to your point, when you're talking about removing the middleman and just the community effort that is part of accelerating this technology, there is really an opportunity for all different types of people to get involved, regardless of where they come from, what they do, and what their interests are.
Yeah. Actually, I want to add to that what you just said, Lisa, because that really resonates with both myself and Grant. I'm sure we both came from pretty modest backgrounds growing up, and honestly, I think of crypto and the blockchain industry as such a disruptive technology that it's almost like the next wealth generation event, right? And as both Graham and I came from blockchain funds right before Republic, and we knew that there's a lot of money to be made. And I'm sure, one of the reasons why people requested us to be on this podcast is to talk about that economic potential of blockchain and cryptocurrency investing. And this is really comes back to profit to the people. We're here working at Republic because we want to make access to this opportunity available to as many people as possible. We've seen how much money can be made, being in the space for so long, that we don't want a re-centralization of wealth that has been happening time and time again in the past. But we want to be ahead of that curve this time around, leveraging a platform like Republic, leveraging our connections in the space and our relationships to really democratize this opportunity and hence give profit to the people.
Well said. One thing that I actually always continue to be very excited by and impressed, obviously, investing historically has been, I would say, like an older person's kind of hobby, right? Like it's not so youth oriented. Whereas in this sector, we frequently interact with people as young as 12 who have, development chops, coding chops. And the accessibility, there's no barriers between them, right? There's nothing to stop their access to the internet. So again, you keep bumping into people. Sometimes we'll have conversations with, anonymity is pretty big. So you do create some friends through either Discord or Twitter, and you're having some conversations, and suddenly you realize, wow, you're like, younger than college age. I find that to be truly amazing. There's, you can start at any point in time. And of course, any geography. That's the other really big part.
Mm. When it comes to just making investing in crypto easier for people, how are you making it simpler? How are you educating and informing the investors?
I think the first and foremost value generation that you are going to get is the education, right? That wealth of knowledge. It comes very quickly. We use the term rabbit hole because you start learning about a very wide breadth of what used to be disparate areas that are now all part of this virtuous circle, which is our new Web3 monies. And, the real basic concept, honestly, it changes when you're talking to different people. If we're looking at the baby boomer generation who's really accustomed to how things are, there's a bit of a barrier to get through, some sort of comfort that you have to get them familiar with digital, right? The exact opposite is true when we go down to the Gen Z generation. I'm a millennial. I do prefer digital. I find the user interfaces on my bank account app, to be much easier than going to a bank. These are all things that I prefer. So, in that regard, you have to really understand where the person that you're speaking with is coming from. At the end of the day, the best thing that you can do is simply participate. And there's so many ways to do it, whether it's just following along with other investors or builders. I really do think the builders and the creators are some of the best minds to go for. You can get a lot of understanding about the quality of the asset from the mind that is birthing it. And that is a very solid investment strategy. Now, subsequently, again, they're all working on large communities. So there are these Discord groups that are wide open. You can talk directly to the CEOs. They will DM you if you send a message. It's like wild. You'd never get that from a traditional CEO. And from there, you just get this full transparency. You can begin to engage. And if, you can contribute in any way, whether that be technical or a little bit more broadly, suddenly you're creating value within this ecosystem. We've seen people, get fully onboarded into companies just from really being present in their chat rooms. So the way that we present this is very much, I would say, unique to every group that we are discussing this with. But in a nutshell, I think, simply put, the way I look at it is this, we all experienced the internet and the revolution that it brought us for information, right? We entered the age of information. And we're now doing the same thing with value. We're just figuring out, how do we bring value onto the web? And what does that look like? It's changed a lot of things traditionally, and it's going to do the same to everything that we understand of how we transact, interact, and exchange value.
Yep. That education portion that Graham was talking about is super clutch. It's so important. This is such a new space that nobody is a professional, nobody is an expert. Anyone that says they're certified, take that with a huge grain of salt, because everybody can become educated in a very short amount of time. It just is a matter of how curious are you? How hungry are you to learn? All the information is out there. There's no formal courses on blockchain yet. There's no, real certification that's recognized by everybody in the industry or standardization. So really, the best way to get involved is to find out what you like, go in there, just dive in and just swim and learn as much as you can. Another thing that we like to promote to help kind of onboard people to blockchain, and one of our approaches that I think is pretty unique to us, is that we try to stay very agnostic to many different companies, and we try to support as many companies as we can. And we try to be very, I would say, I guess I would use the word picky in terms of like the companies we support, because we want to support the best companies in the space and the ones that are trying to build the best, most robust infrastructure with the strongest teams that are the most capable. And the reason for that is because we want to help establish blockchain as a legitimate technology with building with strong teams that have a very clearly defined mission in advancing the space. And that is something that I think is a huge friction point for a lot of people around the world that maybe think that blockchain is a giant Ponzi scheme or associated with a lot of like, bad actors and malicious activity. That definitely does exist, of course, but we try to do our best and present ourselves as like a place where, vetted quality projects can live and thrive.
And so to that point of having a very defined mission at Republic Crypto, you guys are a global blockchain firm that accelerates crypto companies from seed to liquidity. So tell us a bit more about the seed to liquidity. How have you supported companies, and are there some specific success stories that you can point to that were both successful for the companies as well as for some of the investors in our greater community?
Because we are Republic and we have this amazing platform with all our retail users, a lot of our clients actually are building things that we would like to use ourselves. And the Algorand infrastructure was perfect for creating a digital security, which is, again, very different from a lot of the assets we're talking about. We're now moving from traditional securities and pretty much stepping them into the digital realm, right? Again, user interfaces are better. It's just a smoother experience. So, we've done that with obviously Algorand. We have other clients like ORID that we're launching products on. And maybe you don't even know it. Our users probably are not going to understand, that these asset components are inside of our ecosystem, but slowly but surely, I think Republic will actually build this very fantastic way to engage with crypto, but also maybe make it a little bit easier, right? Take out some of the confusing parts of it as well. So, again, that is all to say that the launch process is completely different. You could be an infrastructure platform, really just looking to raise a ton of capital. We have a slew of clients that are really looking for connections in the industry, right? They have an offering that other crypto projects can use, and they want to build that network to be as robust as possible. Maybe it's enterprise connectivity. A lot, we're now seeing more, I would say, many industries inside of crypto, for example, DeFi, NFTs, those are all kind of different avenues. And I think we're really excited for social tokens, which seem to be picking up as well. And we have subsequently grown. We have now the token offering platform, which we leverage for the Republic Note, for Siri Network. We do have more coming. Again, as Brian said, the diligence process, we want to make sure that we're only presenting things that we are really bullish on ourselves.
So going to just shifting to the investor's perspective again. So someone who maybe is crypto curious, maybe they've invested a little bit. You've just shared with us a lot of the cool projects that you guys have worked on, but just at a high level, why should people invest in crypto or crypto projects?
Great question. First off, let's just say that cryptocurrency investing is risky, right? In the same way that investing in stocks and just making investments in general where you can get a return, the amount of return you're getting is pretty much directly proportional to the amount of risk that you're taking. So you see a lot of people getting massive gains on cryptocurrency investments, huge multiples. They're also taking huge risk. So I want to just preface all of this by saying that this industry is an extremely risky and volatile industry. But of course, that's what's exciting about it. That's what people like us, it draws us to it, the energy, the excitement. And also the more you become educated in the space, the less risky it may seem to you because you're making a more of an educated decision when you decide to deploy your capital into cryptocurrency. That being said, I do think that the technology underlying many blockchain projects is highly disruptive. So if you believe in a world where this technology can actually take hold and disintermediate a lot of existing infrastructure, then it's probably worthwhile putting your money where your mouth is and placing a bet. It's the same way that on Republic, we really encourage people to invest in the future that they believe in, right? So that very much goes with cryptocurrency, where a lot of these projects and the tokens that are associated with the projects are very much tied to the utility of that project itself. So, for example, Ether, one of the most popular cryptocurrencies out there. The more people build on Ethereum, the more likely the value of Ether goes up. So it's tied to the usage of that platform. So if you believe that more things are going to be built on Ethereum because that there's a potential for it to really disrupt the financial system of the world, then it makes sense to buy some Ether. So that's kind of what I would say to people that are looking to dip their toes and buying into cryptocurrency, because it really is kind of voting for a brighter future, however you want to call it, a different future with your money.
Yeah. And, I'll add to that to say, just imagine if you could own some sort of, piece of the internet. This is the fundamental components. Again, Ethereum is like an operating system, right? Where people can build applications in which value is shared in a peer-to-peer network. And it's very akin to the way that TCP/IP underlies a lot of the internet, except that's a private company that has built that technology and really reaps the benefits of the scaling. So it's extremely interesting to say, hey, I see this new version of the internet, and I believe that it's going to grow and start to, attract more users, more developers, importantly. And I can have a small little slice that, I can call my own. It is interesting though, because, conversely, it also has its own functionality. So you put that money to use. Again, we already are experimenting with how we currently see value. And I do come back to the different age groups because, the younger generation is very open to things that are a little bit more far out, right? That we would say that's not money. But again, it's some sort of relationship between people and value is exchanged and value is generated. So there will be a reframing. I think that's one of the fun parts, right? So why would you invest? First and foremost, I would say curiosity. Secondly, it's not to get rich quick. I think that's probably a very dangerous path to go down. As much as I love the industry, it is full of baseless schemes, that really don't have technology. Any one of us could fire off an Ethereum token right now. It's quite easy. So the idea that, this is going to make you a millionaire overnight, probably not the best path forward. But if you look at a team, and again, you can go onto their Discords and talk to them. And if you're just like, wow, this is a really interesting concept, I think 5 years from now, it's going to have major legs. That sort of time scale rewards investors tremendously. They really get hurt when you start to shrink that time scale. We see a lot of people get burned when they buy in and a month later they panic and they sell and they've lost a lot of money. But over time, if you find a team that you can watch them build, right? They actually push product out. You can go to their GitHub, which is the repository where their code is actually deployed. You can watch how much code is being put out there. There's really concrete metrics where you can see growth. And at the end of the day, it really comes back to if you find the project to be really fascinating, again, like a 5-year time frame is probably a really healthy one to start looking at. Then I think just putting a little bit of capital in there, it obviously brings you into the community. It gives you an incentive to learn more, to spend more time, maybe to experiment a little bit. But that is why I would say investing in it, because some of these things will be the fundamental underlying of what this new internet of value is going to be. And imagine just owning a piece of the internet, something that people use 1,000 times a day. I find that to be very fascinating.
So it seems like, the biggest part of what can drive a token forward is the community, right? It's like how much people believe in it. Can they advocate and get more people to come and believe in it? And that drives the value. Is that correct? Or are there other factors that really push something up in value?
I would say the community is definitely at the forefront. There are other things. Obviously, we call it tokenomics, the economic of the token. And there are a few projects out there that create a truly virtuous cycle. One of the reasons, Bitcoin worked when a lot of its predecessors didn't, it created a very solid ecosystem in which everyone is aligned on their incentive to support the asset. Ethereum is very much in the same way, as are some of these newer assets that are being birthed. And maybe you can't, see that quite clearly in the beginning, but they start to catch and you start to realize, wow, there's a really good reason for this asset to go up. People are consuming it because they want to use something. I think, for example, this is not a client right now, but there is at this moment a rally happening in this game asset called Axie Infinity, and people play the game and they collect the asset, and it's a limited supply. So we've seen tremendous value. Again, it's their community. The real goal here is to even try to align the malicious actors, right? To say, if somebody wanted to be bad in our ecosystem, because it's the internet, it's wide open, how do we prevent them or give them better incentive to support this asset than to attack it? And that's really sort of the game theory part that we rely on a lot as well.
I mean, I totally agree. I think when you start thinking about the role that the community plays and value in the crypto asset, it kind of makes you think more philosophically about money as a whole. You think about like, how does a US dollar have value today? Like back in the day, yeah, it had value because it was backed by gold. Before that, other money was backed by basically belief, right? Like people believe that it had value, and the group of people that believe that it had value was the community. So it actually takes you back to kind of like the roots of how value is derived for currency. So if you think about, the strength of a project's community and what role that plays in giving it value, it's very, very strong. The community itself really is the spokespeople for that company. They're also the ones that spread education about that project, and they're also the ones that utilize the token in that project. So community is really like very, very important. It's not like, hey, this company has value because we all love it. Like, yeah, that's great that you all love it, but why do you love it? It's a really quick example. Going back to Ether, the reason why Ether has value is because every single time a transaction is done on the Ethereum blockchain, you need to pay a little bit of Ether to make that transaction work. So the more transactions that happen on Ethereum, then the more there is a higher demand for that native token. So that's an example of like a property of that token that the community can understand, and they understand why that token has value as the project itself grows. It's not something that you can like copy and paste for every single project that's out there. Because every project is a little bit different. Everybody's trying to align certain items, certain actions on their platform with their community. And really, that's what the token is for, is to help align activities with the eventual goal that you're going to get the community to do something that is great for the product.
Yeah, I really love the focus on values alignment. And also, I think something that made investing in crypto and just as a whole less intimidating for me was realizing that I didn't necessarily have to know all the intricacies of the technology in order to support projects or support essentially cryptos that I liked based off of the story and the values if they were aligned with mine. And so I think that's, for anyone out there who has been maybe a little intimidated by it, you don't need to be a total expert, because as Brian and Graham have said, no one's really a true expert yet, because we're all growing and learning and developing together. So then just to kind of think about evaluating things, like what would you say are the pros and cons of investing in the popular coins like Bitcoin and Ethereum versus altcoins, and how can people start thinking about which altcoins they want to support?
I think Graham and I are pretty aligned in this. We've discussed this many times, but Bitcoin and ETH are considered, blue chips of the cryptocurrency world. And usually when the market moves, the value usually starts from Bitcoin moving and Ethereum moving, and then other currencies start to move afterwards. And this is because Bitcoin and ETH are almost like the gateways to get into the rest of the cryptocurrency world, right? We talk about, so Bitcoin, obviously everybody that's listening knows what Bitcoin is. Ethereum, people know what Ethereum is, but not many people know that the majority of the projects that people talk about today are built on top of Ethereum. So when you think about DeFi, when you think about NFTs, the majority of the projects that are building on DeFi or using NFTs are actually built on top of Ethereum. So when these types of technologies trend, when people tweet about it or it becomes popular on TikTok or Elon Musk talks about it, then those projects get a lot of volume and traction. But what's the underpinning technology for all those projects is Ethereum. So a lot of the value flows from Bitcoin and Ethereum first, and then it goes into a lot of the other altcoins or just different cryptocurrencies that are out there. For people that are beginning to invest, I always recommend like starting out by dipping your toes in Bitcoin and ETH for that very reason I just mentioned. And then once you get comfortable with the way it works, you understand wallets, you understand how to send crypto from address to address. Those Bitcoin and Ether are very good ways to get introduced to these concepts. Then you become more comfortable and start investing in other cryptocurrencies that maybe are more interesting to you.
Yeah. And I mean, risk profile is a very big part of this, right? Both Bitcoin and Ethereum are very well battle tested. And I mean that through, Bitcoin about 4 years ago had a very, prominent civil war with the miners and some of the participants, and they actually tried to split it, and yet it remains, right? So people deep inside of it have attacked it. The same has happened with Ethereum. Luckily, we've now seen the beauty of these decentralized ecosystems where they're actually extremely resilient. We'll probably do another episode on some of the upgrades that are happening on both of those major chains because it's a really cool time to watch them. But again, these aren't stagnant, right? These are pieces of technology. It's not a chunk of gold that just, I guess you could reformat it, but we can upgrade these things. And it's happening right now. There's two really prominent things happening, one on Bitcoin, one on Ethereum. And again, those processes are extremely difficult because we've now created these amazing ecosystems where in order to make any sort of change, they've actively made it hard, right? That de-risks you is the point I'm trying to get to. And you can look at Bitcoin and think it's really expensive, but of course, it's what is your time scale, right? If I'm looking at passing this to my children, then the 21 million supply might run up and I could think it could get priceless, right? So what is, $30,000 now versus millions later? Ethereum, exactly the same thing, has some really amazing stuff happening too to help it accrue its value. And Ethereum is extremely useful. If you were to buy it and start hopping onto the internet, you can just open, I think the MetaMask wallet has a great browser for all sorts of applications that you can use Ethereum with. This is a great way to dive in. Obviously, get your hands dirty, your feet wet, and start understanding what's going on here. Now, with the other assets, we would call them altcoins. Obviously, they're not as well battle tested. A lot of these are coming out. Maybe they've had their code audited by legitimate firms. Even that sometimes doesn't fully work. Some intelligent person somewhere finds a way to either not really attack it. We usually call it an exploit, right? Like there is a bug that exists and maybe it's a piece of code that wasn't fully reviewed or thought of, and somebody has a really interesting way to take advantage of it. So, again, those usually negatively impact those assets for a little bit of time, but then they can develop around it and fix that problem. And if they're really quality, they'll return. One of the things that people tend to get confused with is the pricing of the asset. So there is a price bias, and there's been a lot of experimentation, right? Where people are less interested in buying a Bitcoin because it's at $30,000 versus, let's say, a Ripple, which is at fractions of a penny. And you're like, cool, if a Ripple goes up 2 cents XRP, I'm going to be, loaded. But the truth is, you have to look at how many of those tokens are there, right? It's similar to price to earnings ratios in stocks. To see how expensive, how cheap a blockchain asset is, you have to look at how many tokens did they issue? Because obviously, if they did 10 billion, the price is going to be way cheaper per token than 1 billion chain. So that's something to take into account. Again, at the end of the day, it's really risk appetite. You're not going to have too much problems with, I think, Bitcoin and Ethereum, especially if you're taking a long-term point of view. With some of the other guys, they might have really hot moments and fizzle out, I don't know, later. They might click and explode and you've gotten yourself on an amazing rocket ship. But again, they have not been battle hardened. You are taking on excess risk. There's, a lot to be learned. And I think everyone that's been in this industry has been, we would call it a rug pull, when somebody pulls the rug from under your feet and something unexpected happens. And that's just part of the game, right? And it is interesting to see a lot of them bounce back. They harden themselves as a result. A lot of bounties are offered to try to purposely, move this forward and reward people for finding these kind of things. But, that's it at the end of the day. It'd be your risk appetite. And then if you want to get into the alts, it's all about passion, right? Just like I said before, do you gel with it? Do you find the idea to be amazing? Do you like the team? Something has to resonate with you, and it should be fun, honestly.
Yeah. One more thing I want to add from a practical standpoint for people that are looking to invest in Bitcoin or Ethereum versus altcoins. It's much easier if you're coming from a fiat currency like USD or yen or something like that. Then it's actually pretty hard to go from a fiat currency to an altcoin. You have to go through something like a Bitcoin or Ethereum to get to an altcoin that you like. So if you're trying to invest a portion of your paycheck into cryptocurrency, it's easiest to go into something like Bitcoin or ETH that has a trading pair that's with fiat currency. So just from a practical standpoint, it might be difficult if you're like, hey, I really want to buy this altcoin that my friend told me about, but I have USD. You have to jump through a few steps to get there. So just like when you want to actually end up investing, be cognizant of some of those steps that are involved to get to where you need to go.
Yep. I'm also going to add on to there just because
yes.
we could talk about this for forever.
Yes,
but
we can.
There are these assets, right? And we're talking about things that are a little more speculative, I would say. But there's now a whole subsection of the industry, which is called stable coins. The idea is that they're generally pegged to the US dollar in one way or another. Either they're actually backed by a room full of dollars, or there's all sorts of crazy game theory about trying to create a stabilization mechanism. And they're all out there. But they've become an increasingly low risk way. I've onboarded more people to USDC, which is, a $1 peg. So if you put in $1, you should be able to take out $1 later. But again, because there's a slight amount of increased risk versus the banks, and there's all sorts of interesting things that can be done on the blockchain, they've started to pay out pretty nice yield. So depending on your risk appetite, you can get anywhere from like a 0 risk 2% yield all the way to insane things up to like 100%, depending again on how much you're willing to really put out there into the world. But this is an amazing thing in an era where your bank account is not offering anything, and you could literally take $100, turn it into $100 USDC, earn some great interest, and when you pull it out, it's still worth $100. So again, it's a really different format of this sort of investing strategy, and we are starting to see new strategies in that whole vertical all over the place. Really interesting stuff is maturing.
So that's really interesting with the USDC. It's in some ways it's kind of like a high yield savings. You're like putting it in there, and then at least it's doing more than it would if it's just sitting in your bank account.
Yeah. One of the biggest things is it can do things that a dollar can't, right? Remittance payments. You can't just send dollars to your family in India. On blockchain, it's just put in their public key and it goes. So again, we're looking at something that's very familiar, a single dollar, that value set we understand. But now it can do all these funky things because it is a new technology. It can play and interact with all of these applications that people are building. It could be a financial application. It could literally be a video game, right, where you're earning things. Or, it also has the power to move through any geographical boundary. We go to Mars, you could send $1 to Mars.
Yeah. So that versatility part of it, I think is really important.
Yeah. One thing I just want to also like that yield part that Graham was mentioning, people think like, oh, it's crazy. Well, how are you getting 5% or 9% on your stable coin? And then you think about like, well, how much money do you think your bank is making? And how are they making so much money these days? With cryptocurrency and DeFi, a lot of these open source protocols and applications are literally replacing what a bank does with code, and all of the take rate, the profit that the bank would typically get and give you the rest in terms of like a 0.5% interest, like that is now up for grabs for the community. And this is why the rates are much higher than what's possible at your traditional bank, because you're now getting rid of the profit that the bank is taking and splitting it more evenly across users. And one of our goals at Republic is really to educate the public about this type of opportunity, right? We're talking about profit to the people. We're talking about how can we democratize access to financial freedom, right? Being educated on the opportunities out there with DeFi, and really just you can start off with just getting higher yield. Literally 3, 5, maybe even 9% is something that's considered relatively safer. And you're doing it with a stable coin like Graham mentioned, which is pegged to US dollar, and you can redeem it for US dollar anytime. So these types of tips and tricks that people can learn to make their money go further are part of what we're trying to do in our mission to really help like democratize access to financial freedom.
And you touched on going across boundaries briefly, Graham. So I know there's a lot of news around how different countries are either regulating crypto or it's trying to make it more integrated as part of their economy. So what should people be paying attention to in the news in terms of what, governments and bigger institutions are doing with crypto?
Yeah, I mean, that's an interesting one, right? The news, it's hard to tell what their agenda is. I would say we've had such a crazy onslaught of like negative stories that, my take would be that the legacy infrastructure is trying to defend itself, right? That's what any organism would do. But, what I would pay attention to is just like what steps of progress are being made. Those are harder to see. They don't obviously get published as often. We're starting to see different countries, taking advantage of it in different ways. It actually happened early in Nigeria this year that they just went through a hyperinflation event. So people and their citizenship is very accustomed to mobile money, right? That's come up very prominent in that region, and they just pivoted to digital assets, right? It made a lot of sense. It was like, I can text it to you, you can text it back, to the point where the country itself, in the Senate, they were like, we're losing control. We have to figure this out. Now you have conversely El Salvador, which was like, we're also having money problems. Obviously, when you're at the bottom end of the fiat chain, it's much harder, much more difficult to control what's happening, right? So they're seeking stability. That's what's going on. So El Salvador, I mean, they flipped the negative news that Bitcoin is an energy suck. It's, super wasteful. And they said, we have this free energy coming from a volcano. We can tap into it. It's pretty easy. And we're going to use it to mine this hard money and try to, provide ourselves with some stability, some sort of, relief from the fear that we're losing control of our fiat, which is part of, another large system. There's all sorts of really interesting plays. It's happening in the regulation, whether that's like Switzerland, Zug, they're trying to say that we're going to understand the law and the legal structure behind it. Other people are using it to free themselves from economic grasps. I mean, we spend a lot of time in Latin America. I've gone down to Argentina. It's very interesting to talk to somebody my parents' age and have them tell me about, 3 hyperinflationary events in their life where their savings just evaporated, right? You earn $100 at the beginning of the week, and by the end of the week, it's only worth like 90 or 80, and then that happens week over week. So, everyone's figuring out different ways to do it. A lot of it, in my mind, that I'm very thrilled for, I think, is this concept of the fourth industrial revolution, which is that we're moving away from that. We make X amount of widgets per hour inside a warehouse. It created the 9 to 5. It created really geographically specific value contributions to now anyone with an internet connection, again, that can contribute and add value in their own way. You could be in India contributing to a project whose founders exist in San Francisco, and like, who cares, right? As long as, again, the community comes together and it supports itself. We're breaking free of geographies. We're breaking free of time zones. We're breaking free of age barriers, even, degrees. If you're 12 years old, you never attended college, but you can program a really mean Ethereum contract, then you're probably in a really good place for the future. And again, that doesn't matter what region we are discussing. So we actually have projects where their communities, if somebody shows up very frequently, they'll say, hey, do you want to work for us? Do you want to be a community manager? We'll give you, a small amount of this asset. And we've seen people, in the Philippines, they're building houses from some of the revenue that they've generated just doing community support. And this is largely the advent of the DAO, the decentralized autonomous organization, which in a nutshell is like a corporation wrapped in a chat room. But these people, they're showing up and they're coming to work because they want to be there, right? It's a very interesting pivot. Nobody's making you, open your laptop, log on. It's purely, I'm organically engaged, and holy moly, there is a feedback loop of value, and it's starting to mature. So again, we're still, I think COVID obviously rattled us out of a lot of the old work style, and this is all very new stuff. I think the millennials have taken our first step into this digital world, and like I said, Gen Z is now building some like really crazy far out stuff. And remember, a 12-year-old has never lived in a world without Bitcoin, so this is all completely native to the younger generation. And I'm starting to go all over the place, but you can tell it's really exciting and thrilling. And it just all of these barriers and our constructs of how we used to operate are going to be reframed. It's all very experimental right now. But the things that, again, with experimentation, we get battle tested, battle hardened, and we can begin to have trust, move this up the chain to, place it into actual banking infrastructure, get insurance behind it, turn it into something that's really concrete and that we can rely on, versus, being this kind of toy that it has been for the couple of past years.
I'm just mind blown that there is a country out there that is harnessing the power of a volcano to basically create value for their own financial ecosystem and financial freedom. Like, that is wild. That's green energy.
Yeah.
Mm-hmm.
The energy issue, Brian and I are both very passionate about it. The incentives behind proof of work, and this is Bitcoin's proof of work, Ethereum is currently proof of work and wants to go to proof of stake. We can do a whole nother episode on this. But obviously everyone's tried to, discuss how it's very wasteful. It's been consuming all of this electricity. However, we subsidize the fossil fuels, so they should be more expensive. And the game theory behind Bitcoin really incentivizes the miners to seek the cheapest energy, which should be green. So there is this incentivization model, as long as it's not being broken in a free market, that you're looking for the cheapest, which always is going to be green. It's going to be hydroelectric, it's going to be wind, it's going to be solar. Volcano. I don't think anyone expected that one last year. But we're now starting to see it, right? They're, instead of posting up these singular mining rigs, they're now chasing waste energy around the world. The North America, there's an association, we're really pushing from it. I would say back in 2017, people tried the data center model that is pretty common for the current version of the internet, put them all in one place. But then, of course, regulations changed, power fluctuates, whatever. So now they're actually getting very fluid, very mobile. They're saying, hey, there's an energy source over here like natural gas. When the wells fill up beyond their capacity to hold it, they just burn it into the environment. So now we're taking, we're seeing mining rigs go right up next to them, and they say, hey, instead of flicking on the flare and just burning this gas that you're harvesting anyway, let's kick on a Bitcoin miner. And instead of polluting all that into the atmosphere, we can just take some Bitcoin, right? Some people call it the monetary battery. There's a couple instances where they're plugging into city grids. And when the city, they're trying to be load balancers. So like during the summer when AC picks up, they'll pay these Bitcoin miners to turn off to not suck any of that energy. But then when the AC units kick off and suddenly there's a massive dip in the grid, they'll say, hey, fire them on up. And, obviously they're making profit by mining Bitcoin. The grid stabilizes, making it much more efficient. And we're starting to see this, there's a profit in finding the best form of energy that you can get, the cleanest. I think we are now moving into an era where we do want to see them mining with clean energy. So these are the incentive models that we're pursuing. Those can both be in the physical world, finding the energy, or in the digital world, protecting it, coming to a group consensus, validating information. Truth decay in the internet right now is like a very real problem. So like, how do we make sure that things that come onto this world are true? There's all sorts of ways, but this is what people are starting to ideate, right? How can we get everybody in this flywheel to be incentivized to support this ecosystem? And, it's truly amazing what some of them are coming up with.
Is it a myth? And is it media hype that's basically saying that energetically, Bitcoin is essentially taking up a lot of energy and wasting a lot?
Well, it's not a myth. Like, Bitcoin definitely is taking energy to run proof of work on the mining rigs. But I think one thing that I would like to, make clear is that the energy consumption of Bitcoin is a feature in its proof of work consensus algorithm, because the only way you're able to prove that you did the work to solve that math problem that is integral to the consensus mechanism that underpins the security of the Bitcoin network is by running a computer that's powered by, a strong processor to solve these problems. And by proving that you actually spent the energy to do it, that's something that cannot be duplicated in a way that, you can duplicate a new handbag. You can't just it's very expensive to duplicate it. And that's a feature of the Bitcoin network. What Graham is saying is that people are maybe over exaggerating the effect on the environment, what that energy consumption is doing, because a lot of Bitcoin mining is actually done through green methods, hydro, solar, geothermal, you name it. And on top of that, the way that the miners are incentivized, as Graham mentioned, is to choose the cheapest, power. And the cheapest power is green energy. If you think about like the cost per kilowatt, like green energy is really going to be the future to generate free energy. Sunlight is free, water flowing is free, and like leveraging that, the resources we have naturally is going to be a really great way to create energy. And you're seeing it now today, where countries that are now saying like, hey, not Argentina, El Salvador is leveraging its own natural resources to create its own financial system. It's actually a good signal that countries are now incentivized to create ways to optimize for green energy and start ramping up and scaling up their own methods to use green energy and leverage the natural resources that they have to mine Bitcoin, so that they can have the financial freedom the same way that El Salvador is having. So I would say, yes, proof of work consensus takes up energy. And then also, let's be clear, Bitcoin is probably the only major crypto that's doing proof of work, except for Ethereum, that's going to migrate to proof of stake. So other blockchains, other layer one protocols, other cryptocurrencies are actually not taking up that much energy at all. Proof of stake consensus, which we can get into another episode, does not take up nearly as much energy as proof of work. So when people talk about blockchain, or when they say NFTs take up energy, it's like, no, you're talking about proof of work consensus, which is really Bitcoin. So, there's a little bit of like a, twisting of the narrative that's being done by the media, of course. But at the end of the day, proof of work is a feature of Bitcoin. And yes, it takes up energy, but the source of that energy is increasingly becoming more and more green.
Awesome. So we've touched upon a lot today. I think we've covered a lot of ground in a short amount of time. So just to finish us off, you guys have been through crypto winters. You've learned a lot. Can you just share what you see as the future of crypto and one most important lesson that you have learned through your time?
So yeah, I've been through a few crypto winters. I think Graham has been through more than I have. But basically, I would say, if you believe in the technology, meaning, if you've done the research and you know that the projects that you're supporting, the ones that you have put your own capital into, you see them building, you can literally engage with them on Telegram or Discord, and they're still making things, and they're making things with a mission and a purpose, then you really don't have anything to worry about. One thing that has really stood out to me over the past crypto winters that I've worked in is that crypto winter is only a winter in the monetary value of the currency, but the technology and the amount of smart people that are getting into the space and the amount of advancement that is happening by the builders is still literally breakneck. Graham and I have trouble staying up to date with the news every day. People now, I would get people messaging me these days saying, hey, have you heard about this new project? I'm like, no, I haven't. But usually, before, like maybe a year or 2 years ago, I knew everything. But today, it's just literally impossible. So even though the market may currently be in a downturn today, that doesn't mean that innovation has stopped. It doesn't mean that smart people have stopped getting in. It doesn't mean that governments are trying to adopt this. It doesn't mean that institutions are exploring ways to use cryptocurrency. It just means that there is fear, uncertainty, and doubt in the market, and the prices have gone down because people have been selling. Of course, there's been some news about the mining operations being shut down in China. We should talk about that later. But really, what I've learned about crypto winters is like the builders will keep building, the technology is still moving forward, and we're literally still at the beginning. A lot of the stuff that we envisioned, Graham and I've envisioned when we first joined the industry, has not come to fruition yet. But we see people today, many people around the world, building towards that future. Even though maybe the market has not been performing up to what you expect, the technology and the solutions are still very much going strong and supported by the most passionate, smartest people that I've met.
100%. I very much agree. I think, we're My vision for the future is that we are going to see a melding of the physical space and the cyberspace. We're moving towards that in multiple ways. Crypto represents the value of this convergence of spheres. Artificial intelligence, obviously a major component of that. Augmented and virtual reality are things that are really picking up, have gained a ton of steam. And you can have a world where you have an avatar and you can do all sorts of awesome things. And again, this money crosses that barrier between the physical and the cyber, right? I could buy an asset in a metaverse with the same exact Ethereum that I could use to buy a car in the real world. And those realities are only going to continue to blur again as we break down geographies, right? You can do it for co-working in a digital room. I've done it it's quite amazing actually, through just experiencing things that are outside of your box. I was in Brooklyn for a lot of COVID, and putting on a headset and traveling to Antarctica was very relieving. So that's the ultimate future that I see us in. In terms of the winter, I mean, they're brutal, but they hurt the most if you've placed your money into the market after it's already gone up a gazillion 1,000%, right? Maybe that's not the best time to enter when everybody else has already made all the money. But just like Brian said, if you have that longer time frame, if you're actually in it because you found a project that you're gelling with, that you're vibing with, there's a lot less noise in a winter. Right now, we're seeing like this whole slew of dog coins, all these things that are essentially memes, and they have that community side that we discussed earlier, but they don't have a technology side. Those all tend to disappear in a wintertime. So there's less stuff to distract you. You can actually see the juice. And then, of course, if there's something that resonates with you and you have, again, this longer multi-year time frame, you do have the opportunity to invest at a much cheaper value than during these bull runs where honestly everything goes. I mean, we've been watching recently this year. If you're coming from 2017, you're like, this thing I thought was dead in 2017 is the top grosser of like 2021. This makes no sense whatsoever. So, obviously it's much easier to enter at the bottom. I think that's just like basic arithmetic. But of course, we are humans. It is very difficult to watch these assets collapse. But as Brian mentioned, I've been through 3 now. They tend to be pretty consistent. I would say we are in a massively speculative world. So that's going away again, right? We're getting battle hardened, battle tested. More institutions are coming on, more insurance, more robustness is coming through. We'll probably either see those summers and winters either change their rhythm. Maybe they're shorter. Maybe they flatten out, right? In a nutshell, if you believe in it and you're long-term, I mean, the easiest way is to dollar cost average, which is just to buy a little bit, let's say every week. So whether you're buying at the top or at the bottom, it averages out. It's not the most exciting way as an investor, obviously, but it is proven to be the most consistent and safe. And yeah, I mean, winters are intellectual gold mines. So that's the way I would look at it.
Awesome. And final question for the both of you. What does it mean to you to bring profit back to the people?
I mean, I think that profit to the people is very much in line with the general ethos of blockchain technology, where it came from, really trying to create this new world where you're directly connecting the builders to the communities, or you're connecting the content creators to the communities. So there is nobody in the middle that's able to take that cut that, companies today do. But that profit that they take actually goes back to the people, or it goes back to the content creators, which I guess are also the people. But blockchain technology, I think, really embodies that because it really creates a more fair system where the money is seen to flow more transparently, and everybody knows, where the money has gone, and there's no black box of like who's taking the cut where. So, that's why we're into crypto, and that's why we think it actually really aligns with the message here in this podcast.
Yep. And I'll follow on. This whole thing is about democratization, that any participant in an ecosystem should be able to extract value from it for their contributions. And, one of the things that we're really seeing, and I'm extremely impressed with, I'm, in the first home buyer age group at this moment. And mortgages are wild, right? The things that a bank will either give you a loan for or not. It could be the color of your skin. It could be the gender that you are. It could be where you are with your love life, right? Are you married? Are you divorced? Are you in between? All sorts of reasons why, you can't move forward and buy a home to build the rest of your life and live happily ever after. In this world, it's going to be open up your cell phone, log on, a couple clicks. It's going to say very numerically, black and white, do you have enough assets for us to issue you a loan? Cool. And you press the button and bada bing, bada boom. So, we're removing that human element, those barriers. And again, it's just a great equalizer. I think everybody should have equal access.
Great. Thank you guys both for a very enlightening hour together. How do people get involved in the Republic crypto community? How do they find you?
Yeah, we're on Discord, we're on Twitter, we're on republic.co/crypto. So you can find us there.
Yeah. And there will be some exciting Discord developments, hopefully with the note as well, and all sorts of things that we'll tease to help bring it all up and, create a more robust relationship.
Awesome. Well, thank you again. And we cannot wait to bring you on very soon back to talk about and just dive into just some of the things that we touched upon today, because as we know, there is a rabbit hole we can go down. And I think that we just want to keep learning more. So for everyone who's tuning in, this is not the last time that you have seen Brian and Graham. So if you enjoyed this episode, you're in for a treat in the future as well.
Awesome. Thanks, Lisa.
Thank you.
This podcast is provided for educational purposes only by Republic and Republic.co. Nothing discussed should be construed as legal, tax, accounting, or investment advice. The views of the presenters may not be the views of Republic and its affiliates. Always consult with trusted professional advisors before making investments. Private investments are inherently illiquid and may result in a total loss. All rights reserved.